But had we been here, right, it's probably better we do it this way. Had we been here, because look, to be fair, I hadn't seen this, right? I just did the 12-hour forwarding after I already started doing all the work. So let's just stick to where we were. Clearly, that's going to be my hypo A, right, to test this, and potentially to go further. My hypo B is going to be what? Probably we turn into some sort of rotation, but we go up. And I believe that's what I had, which I just brought down. Right? Once you've got your direction, the rest is fairly straightforward, okay? It's just applying a bit of common sense. I did say to you before that ideally my hypo A would be looking for some sort of pullback to get into the move. Hypo B is going to be less aggressive. In this case, I'm going more my hypo B to be rotational, and I'll tell you why hypo B has become the pullback, because we're not in a rotation. What's the likelihood we're in imbalance and we're going to go rotational? Very unlikely, right? So I'm being realistic. That's all I've done. I've put it as my B, and then if you saw, I put C as going down, and I said to you, I always do that. What could happen if I'm wrong? Well, it goes down. I'm not going to go short this market in a million years. Do you see now why high time frames are important? Because up until now, in particular, the first task where I got you to do hypos, what was I doing? I was saying CVA below is a breakout of value pullback, above is a return to value pullback, right? Guys, that's not what I'm... Do you see? I have no interest in a breakout of value pullback. Why? Look at my hypos. They're all long. I do not want to be selling this market in a million years, right? Look at the monthly. Do I want to be selling that? No. Look at the quarterly. Do I want to be selling against a strong rotation, which I think might go to the other side? No. Yearly could go either way, to be fair. Do I want to be selling against my prior value area? Where was it? Here, prior value area, bullish. No, I don't, right? I just don't want to be doing it. I don't want to be selling this market. So my C hypo is really, if I get long here or if I get long here, I really don't want to be in this market if I get down. My C hypos tend to be where I don't want to be in this market. So look, hopefully that was clear. There were multiple opportunities to buy even later in the day once we built some value above the point of control. Do you remember what I said? 32, be careful. Once we built value above it, that's it. We're off to the races. All right. It did end there. Fine. There was honestly nothing in the order flow to clue you into that. But in terms of entry, look, it's just beautiful, really. You can even see a little stop run there. Very flat delta. Okay, and above zero, if you want to talk about, you can even put in CD at the start of the day. I was coming into my day and I said, look, let's just imagine we were there. The delta's bullish, right, guys? It's traded above zero, greater than zero. Everything ties in. To me, it's a buy all day long, right? And I know I put here 32, be careful, and I didn't go into it, but really it's just a return to value pullback is your expectation. Now, I apologize, guys. I hope the quality of this course has made up for the lack of my journaling and ability to write in sort of plain English. I am terrible, right? I can write, don't get me wrong, that's exaggerating. I just mean I'm not very eloquent in terms of putting things in a written down format. So it's kind of a little bit all over the place, but hopefully you get it, right? This is an institutional hypo, okay? This is really professional trading at its, I'm saying at its finest, but not because of me. It's just because this is what I learned being in an institutional environment and watching incredible traders and how they developed hypothesis. This is the stuff I'm saying. Look, don't think when I say trading at its finest, I've got an ego and I'm talking about myself. I have confidence, okay? I don't let other people say to me, oh, but you should do this, you should do that. No, unless they can show me logically why what I've just shown you is wrong, I have no like interest in all of that. I have confidence. You have to. In this game, you've got to pull the trigger if your hypothesis is strong. All I mean is by when I say at its finest, I just mean as the industry as a whole. Guys that are doing this, this is what they're doing. Incredibly successful guys in proprietary trading environments, and obviously in certain areas of the bank where they're employing proprietary techniques, and they've got guys developing discretionary hypothesis. This is it. All right, guys. Whether they've got it in an Excel spreadsheet and they're making it all nice and neat, or they've got a amazing diary and a journal, or whether they're doing it like me, this is what they're doing. Okay, building a story, right? I know possibly what real money is doing. I know what like the longer term spectrum of hedge fund and asset management is doing. I know what the medium term spectrum of hedge fund and asset management is doing. I know what swing traders are doing. I know what day traders and locals are doing. And to some extent, I know what HFT and so on and so forth are doing because I'm reading CD. I've just given you the entire universe of speculators, right? And to some extent hedgers and arbitragers as well, because obviously they'll be looking at this stuff, but they may not just be looking at it directionally, but they may be looking to get in the market at these opportune moments. So covered the whole spectrum. Hopefully that's clear, guys. Let's quickly move on, right? I'm not going to go obviously into that much detail for every single one. Let's quickly move on. And what I'm going to do is I want to get rid of this, but I want to keep the longer term stuff because some of it may still very well be valid on the next day. Give me a second. Let's just get rid of this. Don't forget, I do want to cover a little bit of a different market, ES, and give you a whole rundown using multiple VWAPs because I think it'd be very useful. So forgive me if I rush through this now because I was fairly comprehensive and it's really not going to change that much during the week. Right. So if we shoot forward, so we're not changing obviously here, nothing's to be merged, right? It's just a single day. Nice balance inside previous balance, albeit slightly bullish. Let's see what happened here. Again, don't forget, when I'm skipping forward so fast, it is going to be a little bit slow, so you'll have to just be patient with it. Don't do what I'm doing, which is being incredibly impatient. But this time I'm just going to shoot for the whole 12 hours, okay? See if it moves forward. It looks like it did. Perfect. Okay, so on this day, right, what are we keying off? Well, we're inside the composite value area. Are we still pretty much, is there anything we can add to our previous sort of hypo? So like I said, I start on the weekly, right? I'm looking at the weekly. Has my prior value area breakout of value pullback changed? No, it hasn't. I'm still very much imbalanced, okay? Now, look, I've got a key piece of information. Over the last 2 days, what are the swing traders, 2 to 3 day swing traders doing? Nothing. Rotational. Do you remember I put here DVA not applicable? Guys, incredibly valuable information, which I showed you in the weekly section, but we can now add it to our like overall, right? So rotational. What does that mean? It means I'm probably looking for long opportunities at the other side, right? So where am I? Approximately, let's have a look. 31, 33. So I know, right, in this region, I'm looking at potential long opportunities. It's rotational, right? Maybe I'm looking for short opportunities at kind of like 30 to 50 area. So where's that? 30 to 50. Problem is I'd be very hesitant to short here because what do I have? I've got a big gap up to here and we know this thing can just fly. That should be your expectation. Here as much change? No, we're still here. We're very close there, but we're in an imbalance up. So, you know, again, do you see the rotation environment makes sense to me here? Because I've got a problem above and I've got a problem below. Stuck. Rotational. Perfect. Here, tricky one. Very tricky one. Yearly, we'll come back to that in a second because I just need a moment to think. Yearly, nothing's changed, right? It's normal trend failed. Possible short-term, I can't even read my own writing. Possible short-term or rotation. No, I was exaggerating. It's not that bad. It is pretty bad, but it's not that bad. It's possible short-term, slow trend or rotation. Yeah, exactly. We discussed that. Prior value area either. We got a big gap up. So really, it's not giving me much information. Quarterly, again, I kind of like it up, but then we've got the first standard deviation there. So again, you know, it could be argued either way. So the whole day, for me, just tells me rotation. This is when I can start developing hypothesis. You know, if I'm coming in here for the day, you've got to see this, that my initial hypothesis might be something like that, right? That's my A hypothesis. It probably wouldn't even be as high as, sorry, as low as that. I might even extend it to the bands. But again, don't forget the bands wouldn't even be there. I may even be tempted to do that. That was my point. You know, make it potentially a higher. Now, yesterday I said to you I had a bullish sort of conviction. I'm going to be honest with you. I know that I wouldn't really be interested in selling this market. I'm going to be honest with you. Even though it sold off, doesn't matter. I would much prefer getting long, because the market is buying. We can see the market's long. It's got more interest in getting long. For me, this is me. If you think differently, I've got no problem with that, right? We've already talked about this. That's why the market exists. Differences of opinion happen. It's fine.